All right, welcome everybody to another This Week in Crypto on a very happy Valentine's Day across the world for those of you who celebrate. I will be going solo today, but I've got a lot I'll be able to cover. Of course, we'll take any questions that might be popping into chat for those of you who are watching live. For the vast majority of you who are watching on replay, um, we'll do our best to kind of navigate where we think things are going, and you may very well see that prices have jumped or fallen a little bit based on our very loose predictions of the markets. Always remember that we don't give investment advice on this channel. What we do is we look at probabilities based on where the metrics currently stand and compare our current state of the markets to what's usually happened in the past when it's looked like this. So um, with all of that said, we can jump right into some of the big trends of the week. Obviously, broccoli, Binance has been in the news with a lot of BNB stuff going on. You can see BNB here up about 13.5% over the past week. Definitely one of the better performers. Litecoin also having a pretty big week, up 20%. Trump with hat has just been all over the place. I know there are multiple Trump tickers out there. So if you're confused by it, trust me, so are we. It's definitely a little bit confusing when it comes to official Trump coins, if you can even refer to any of them as that. And then you see Hex, interestingly up just about 60%. Richard Hart is a happy man right now, I'm sure. And that coin's been dropping pretty aggressively before this week. So it's interesting to see that it's finally had some of a resurgence compared to the rest of the markets. Also noticed you'll see a few anomalies here that are kind of newer coins showing up on our market cap leaderboard when they shouldn't. So we're still ironing out those bugs, but for the most part, this is going to be ranked by highest to lowest market cap. And you can see that overall, when we account for everything or just about everything in the markets, we're sitting at just above $3.6 trillion at this time in terms of the entire crypto sector. And the volume, by the way, the market cap has gone up about 0.9% in the past week, which is interesting, especially with Bitcoin being down 2.5% and that making up the largest chunk of any single asset. On the volume side, we are seeing a 32.3% drop in trading. So this is kind of what we are continuing to see and should continue to see until we see potentially a break of 90K or a break of 100, potentially 105K is where I see traders really starting to get back into that FOMO fever again. And we've been in this range for quite a while now, pretty much since the all-time high occurred on January 19th or 20th, depending on where you are in the world. We saw a pretty big retrace of about 15-ish% before we kind of started to bounce a little, get toward 100K, a little bit of a tease there. And now we're kind of ranging Bitcoin, that is, in this kind of 93 to 97K tighter range for basically all of February so far, with a few minor exceptions where it broke out of that range. But until that tight range breaks, you're going to continue to see a lot of altcoin plays. It's kind of the perfect circumstance for a meme coin like broccoli and some of these other ones, Luigi Inu, to start getting a lot of traction and excitement. Whether that leads to market cap gains or losses for them is another story. But we'll go over several coins because Bitcoin has a little less sensational stories to tell about it than usual. This is kind of that phase where retail traders are clearly getting bored, as evidenced by trader volume dropping by a third in the overall sector. And a lot has shifted toward riding the hot horse, if you will, finding the altcoins that are getting those temporary pumps, then jumping out, avoiding the ones that are dumping. And it's kind of where the pro traders, if anything, are really making a a name for themselves. I'd recommend, by the way, if you haven't checked it out, I haven't showed this on the stream in a little while, but SanR always offers some great insights in terms of where markets are likely to head next from the perspective of many of the pro traders that use Santiment's tools. So essentially, you can check out the predictions that are coming in from live traders. And every 2 weeks, Santiment gives away essentially free crypto. We can't really technically call it free because you're paying gas fees to make predictions, but it costs no real crypto other than gas to jump in and decide whether you want to open a mock position and call it a San rise, meaning you expect prices to go up, or call it a San set where you expect it to go down. So there's a lot of fun you can have. It's like essentially a game that you're playing along with other traders, but for real crypto prizes if you win, in the form of sand tokens. So it's a lot of fun, and I recommend getting a lot of insights on real predictions going on rather than just reading your social media feed, where a lot of influencers out there might be disingenuous and telling people that they opened a long when they haven't, or opened a short when they haven't, so on and so forth. Okay. Another thing I want to point out is the ETF volume right now continuing to decline. So this makes sense. It kind of corresponds with what we're seeing on chain with less and less trader volume. We did see pretty much the biggest spike. This was just a couple days after the all-time high. I wish I could plot the Bitcoin price, but we should have that in the near future. But this was just a couple days after the all-time high, and it was the highest since last March. And then immediately we started to fall off again. If we go down to inflows and outflows for some of these individual ETFs, right down, if I can find it. Oh yeah, it's all these flows, my mistake. So this is the OG GBTC. It's going to continue seeing outflows indefinitely as people move their funds into the more modern ETFs that are out there now. IBIT has been seeing the big spikes, at least, are mostly high. And then there's a few outflows that are starting to trickle in. The same goes for FBTC, probably more on the outflow end than inflow. So that's a little bit of a concern. Hoping this one can refresh because I want to show the latest. BitB, same thing, a little more outflow than inflow. Big outflow here from the HODL ETF. This was actually a pretty massive spike that definitely shows some concern. And there's IBIT. Yeah, it's pretty much showing the same outflows as you. Yeah, GBTC, this is the volume. But yeah, among the 3 to 5 ETFs that we have inflow outflow data on, it looks like a little more outflow than inflow. So take that for what you will. I don't see it as the biggest alpha indicator anyways, but it does indicate that a lot of the institutionals that are driving these ETFs might be pulling back just a little bit right now because they're worried about the price patterns no longer just going up, up, up with a tiny little down, rest for a few days, like we saw throughout the end of quarter of 2024, especially in Q4. All right, moving on to some whales. Speaking of institutionals, this is the bright green line that I like to check in on every few days. It's still looking good. This is kind of one of the confidence boosters that we try to remind our community about, even when things start to look a little bearish. If the key stakeholders, or those that hold 10 or more BTC, continue to collectively accumulate, there's only so far that Bitcoin's price can really fall, and therefore all of crypto can fall. The aggressive accumulation that we saw post-Trump election back here in mid-November, that's kind of stopped, right? Like, especially once we got to post-Christmas, just a little under 2 months ago, that's when we started to flatten out. Then we got, a little more hype. This was right when the Trump inauguration was here on January 19th and 20th. And then it flattened out a little more. We saw this big dip on this flattening period, you'll notice when it flattens out, right? That's when the price of Bitcoin starts to retrace. Um, and then when it starts to pick back up again, we tend to rebound, but we really haven't rebounded much ever since this flattening period and then this, inauguration accumulation happened. So right around here at the end of January, that's where we started to struggle. A little bit of an accumulation on February 2nd and then more semi-flat, but it's all kind of perspective based on the axis restraints right now. For the most part, they're still moving up. If I go even just, 1 month ago, from January 14th until now, the 10 plus BTC wallets have still collectively accumulated another 20.5K BTC, which is worth 200. Man, I'm bad at math. It's my early morning still right now, but something like 100 million. It's in the billions, right? 2 billion. Someone can correct me in the chat if I'm wrong. But it's a ton of USD that's still pouring into Bitcoin on a daily basis. Now, speaking of USD, the reason I have these red and blue lines here this time around is because I wanted to give an update on how the key stakeholders are treating their stable coins. And yeah, they are still moving down pretty aggressively. So the ideal setup for a breakout is when we see more accumulation of Bitcoin to go along with accumulation of Tether and USD coin. And right now, it appears as though they're mostly swapping out Tether and USD coin, which are both moving down, for a steady upstream of Bitcoin as retails are dropping those coins and essentially feeding them to these whales and sharks. So where we're at now, it still looks like we could be ranging a little bit longer, at least based on just this chart alone. But we've got plenty of other things we can check out to supplement our analysis here. One thing that is a little bit iffy is the supply and exchanges. You can see for most of the past 3 months, it's continued to go down, down, down. And then just about on February 5th, a little over a week ago, we started to jump back up a little bit. And the current supply and exchanges sits at about 7.61%, Bitcoin that is. It got to as low as 7.54. So we saw about 0.07% of all of Bitcoin moving back to exchanges based on our data and the information we have on known exchange addresses. Meanwhile, Tether and USD coin are actually moving in the opposite directions. Excuse me. The Tether supply is moving up more and more. Keep in mind, this is actually looking at just the top 10 exchange wallets. And then the top 10 USD coin wallets are at a 3-month low. They were looking pretty high at 5.32 billion just a couple days ago. And all of a sudden, they're at 3.73 billion. So consider this kind of a small sample size, of course, because we're only looking at the top 10. I think this is kind of a pretty solid indicator compared to just looking at all of Tether and all of USD coin. So that's why they're plotted a little bit differently than Bitcoin, which is looking at the entire percentage of supply. Weighted sentiment, I don't use as much. Why don't we switch over to the positive versus negative ratio, which gives us a little more of an idea of where things stand based on just pure bullish versus pure bearish commentary on a daily basis. So what we're seeing now, interestingly, is a big uptick in positivity. It's interesting because there hasn't been a huge price swing either way. I know MicroStrategy, which is now known as Strategy, has continued to accumulate with more reported additions over the past couple of weeks. So that's been encouraging here in February. But for the most part, it's kind of just a natural swing back in the opposite direction after we were seeing a lot of negativity when we were reporting on the sentiment 1 week ago on the same live stream. But yeah, you can see the positive sentiment and negative sentiment as I highlight, look at just the very right of my screen as I'm hovering. They're both just going down considerably. So the ratio might be up, but it's mostly just less commentary overall on both the positive and negative side of things. Uh, and that's quite interesting to me. I mean, it kind of matches what we're seeing with the trading volume, which is down by a third compared to last week. It's just less and less people commenting, and obviously less people trading as well. Um, and those that are still standing are resulting in showing more of a positive bias than negative bias. So it kind of makes sense when you see this extended ranging period for the ones still standing to be a little more confident in general, especially when we're looking at it in just a ratio perspective. Now we can add, if I go to my combined metric template right here, where I can just click the expression button, and I'm going to add social dominance to this mix. So we were dividing positive sentiment by negative sentiment. That's what X1 divided by X2 is. What if we multiply in X3, now that we've made X3 the social dominance, click save, and it really doesn't make much of a difference. It's just mostly getting skewed by the ratio of positive versus negativity. But how about we look at just social dominance by itself to see how much is related to, it's now X1, so we can just do this. How much of this is just related to Bitcoin talk in general? And it's actually what you'd expect while Bitcoin's doing very little and altcoins are the ones generating most of the excitement. It's just less and less and less discussion, especially just throughout February. If I zoom into just the past 2 weeks-ish or so to February 1st, like so, you can see the social dominance, which is what this gold line now represents, going lower and lower and lower and lower. It actually was extremely low yesterday, and it's up just a tiny bit compared to yesterday right now. But obviously with the broccoli hype and all the other stuff going on, traders' interests are kind of just veering toward anything that's generating volatility right now. And Bitcoin is still somewhat volatile compared to usual, don't get me wrong, but it's volatile within a tight range, if that makes sense. It's at 93K, one day and 97K the next, and then goes right back down to the 94, 95 range and sitting around 96 now. But I think that a lot of traders' interests have just veered toward, what the latest coin pumps are, more so than usual. There's always a little bit of that going on. But if I go to trending coins here, there we go. You can see broccoli clearly in the #1 spot. So the meme coin that's associated with CZ's dog, which I think we all find kind of funny, is actually getting quite a bit of hype right now. The price isn't really doing a lot based on what I'm seeing on this mini chart here. Do we even have, let me check. I'm going to check to see if we actually have the broccoli. We do. So, of course, we have 2 of them. I'm going to assume this is the CZ's dog one. Interesting. Okay, so this is about all the data we have. I presume that I thought that it launched a little before this, but maybe I was mistaken and it was only the hype being generated around it on Binance. And then it ended up launching roughly 8 to 9 hours ago from the time of this recording. Either way, I mean, like you would expect, we saw an initial pump. This was during a little after midnight US time. And then we saw this big dump. So if we add on social volume, which is mostly being generated by the rest of the world, we don't have it yet. Do we have regular volume? Yes, we do. So this is more of a running tally. So it's not going to give us hour by hour volume, but it does look like it's mostly going in an upward trajectory right now, even with the correction going on. So expect for broccoli to continue to see some pretty big swings. as soon as we have some social volume data on it and potential sentiment, I'll provide some updates either on a video or in a written insight on our socials or on our insights page. So look out for some broccoli analysis once we have some substantial data we can actually use to give you some updates. Going back to our trending tokens here. So we see dog right below broccoli. I think this is a separate asset that is kind of running in tandem with broccoli. If I go to our Sandbase page and type in dog, if Max or anyone in the chat knows, feel free to correct me, but this is what I'm seeing right now, dog, and then in parentheses, Bitcoin. I don't know if it's an older one because dog could very well be a longer term meme coin based on the name, but it's been going way down, 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 and a little bit of an upswing now. I have a feeling this isn't related to the coin that's showing up on the trending coin asset. So I'm not going to waste time about things that I'm not fully up to speed on. But I know that, broccoli is named after CZ's dog. So there's probably a little bit of mixing of the conversations going on there that's causing dog to slot into the number 2 spot. The word happy is obviously kind of the same situation with Happy Valentine's Day coming in. And there is a coin with the name called Happy Cat, and it's existed for about 3 months now with pretty remarkably abysmal price performance. But regardless, it's in the number 3 spot in large part because of the fact that today's a holiday that's causing it to get more frequency than usual. So I'm going to ignore those. BNB though. So this one has been a legitimate coin in the news a lot, as has Solana. Binance Coin actually flipped Solana. If I put the two of them on the same axis and I'll plot their market caps right there, and then I will put Solana's on the same here. You can see, just take off the price, put them on the same axis by clicking the pin axis button. Check out how they just recently flipped spots, similar to how Solana surged way ahead of Binance Coin. Let me just go to the last month or so. So Solana went way ahead at this point on January 19th, just about 24 hours before Trump got inaugurated. Solana was significantly higher, $140 billion versus Binance Coin's $98 billion. So at that point, you're thinking Solana is for sure going to have that number 5 slot for a long time. But gradually, Solana really started to slip as Binance Coin, which traditionally stays a bit more stable, didn't slip nearly as much. They both bottomed out around February 2nd, but look at since right around February 2nd, how Binance Coin just trickled up, had a big surge here just a couple of days ago. And all of a sudden at this point on February 13th, Binance Coin was about $11 billion ahead of Solana. And since that time, they've kind of exchanged spots, which is quite interesting. You don't normally see top 5, let alone top 20 coins fluctuating above or below each other in market cap rankings quite so frequently. But as of now, Solana is ahead once again. The two are kind of having a battle on social media right now. And Binance Coin doesn't have nearly the community that Solana does because it's essentially just the native token for Binance. But of course, people who are fans of Binance in general are still going to back the asset and potentially come out and discuss it. And Binance Coin really only gets discussed when it's seeing price pumps or there's some controversy going on with Binance. But you can see, all of the related stuff is going to be about the price right now. And then people are also talking about the actual logistics of the coin, its burning mechanism and comparisons with other cryptos like Solana and Ethereum. Users are also inquiring about transferring Binance Coin using the BEP20 network, indicating its relevance in current crypto transactions. Binance Smart Chain and associated tokens, including the Broccoli token, right? So obviously with it being related to CZ's dog, of course it's going to be on the Binance network. And there are other meme coins that are starting to trickle in using the Binance chain, and you can check out some on stuff like PancakeSwap and other platforms out there if you're so inclined. But I'll be putting out an insight pretty soon to give some updates on the mild meme coin craze that's going on BNB, kind of similar to what we saw back in August, September with Solana and the meme coins coming out there. Even Tron back in September, October, there was a lot of hype. So yeah, this is the latest chain to suddenly see a little bit of an influx in memes that are giving the layer one, the native token, a little more hype than usual. And then here's Solana trending due to its increasing popularity in discussions about blockchain technology and crypto. Users are sharing insights about its performance, recent developments, and potential investment opportunities. Pretty generic description here. But you can see the crowd is still somewhat bullish. I'm going to check the more live update because I think this is a better measurement if we go straight to Sandbase. And we'll go to, well, actually, why don't we look at BNB while we're here? Yeah, so Binance Coin, you can see a little bit of an upwards trend ever since pre-inauguration on the 17th and 18th. I'd call this, if we give a little more of a sample size, yeah, I mean, it's kind of in the middle of the road compared to what the big spikes were back in the end of 2024 and January 12th. So nothing special going on sentiment-wise. If we go to Solana, yeah, it's down. I mean, this is the last 3 months, and if we drew just a rough average line of where these gold lines are fluctuating, with this being super positive and this being super negative, by the way, this is very interesting that we saw a major negative spike right after the top happened. And then we, of course, bounce, and everyone's trying to buy the dip around here. But let's call right around there, maybe there, the midway point of positive sentiment and then negative sentiment. We're pretty firmly in a negative sentiment cycle for Solana right now. And this is a very sentiment-driven asset, kind of similar to a lot of meme coins. And to me, this is a good sign for the asset, assuming Bitcoin can start to turn things around and make its way toward 100K plus again. Solana could be one that really benefits from the level of FUD and the retail traders that have jumped out, despite the high conversation rate going on and the fact that it's trending right now. I like Solana as what looks like a decent buy low phase if we start to turn it around because of all of the retailers that have kind of given up on the asset, at least temporarily. And not to be ignored, Ethereum, which I put out an article on last week, it's also sitting in the middle range. It's had a few signs of potentially trying to break out before getting topped out around the 2,800 range, but it's climbing back. It's above 2,700 now, middle of the road in terms of sentiment. And I don't think it's at risk of being an underperformer for too much longer. It's one of the worst performing altcoins in the top 30 over the past 6 months or so. It could probably go even longer than that if I really did a detailed analysis. But if we go to the main tab, I want to look at MVRV really quick for Ethereum, and then we'll check out Bitcoin a little bit more. So by the way, dormant coins are not really moving much. That's not the greatest sign. I'd like to see it look a little more like Bitcoin, which we'll check out momentarily. MVRV, I think I passed it. There we go. So yeah, this is what I'm talking about. So over the past 365 days, any address that's been active during this time period, they're down an average of 13.7%. And a lot of assets, most assets, are on the positive end still, because it's been such an impressive run between late 2023 all the way up until Trump's inauguration, when almost all assets kind of topped out. But Ethereum is actually down both on the short-term end for active wallets in the past 30 days and the longer-term trend for active wallets in the past 365 days. So that's a promising sign if you are a believer of historical probabilities, which you probably are if you're watching Santiment content. The math indicates that there's a higher likelihood that we see a regression to the mean on the upside, where we start to see Ethereum gaining on some other altcoins once we start to recover and see a little more positive momentum, like many of you are used to over the past 5-6 months or so. Moving back over to Bitcoin now. So this is how a lot more coins look. You're getting a mildly positive return for the average returns of the past, or average wallets that have been active in the past 365 days. Bitcoin's active wallets in that time frame are plus 17.2%, while shorter term, there's a little bit of a window where you could probably justifiably add on. The MVRV for 30 days is negative 3.2%, indicating traders are actually below water right now that have been active over that time frame. So I like the potential of, maybe over the next week, seeing a little bit of a rise because of the fact that we've just seen so many retail traders jump out, as evidenced by the total amount of holders, which since the all-time high occurred right around the 19th or 20th, we had 54.72 total holders then, and now we have 54.47. That's a 253,850 wallet net drop, or about 0.46% less total non-empty wallets compared to just about 3.5 weeks ago. So that's a big drop, and it's a good sign more often than not. When we see traders dropping out, obviously this line is mostly corresponding with very small wallets. That makes up the majority of the network, just like every network. And when they're dropping out, it's usually a sign that retails are shedding their coins, voluntarily liquidating them, and the key stakeholders, which we already checked on, are scooping them up for future pumps that they plan on executing, and using their capital to get prices to go the positive direction after, retailers have thrown in enough FUD and said, I'm done, crypto is dead, the party's over, fun while it lasted. So I like the sign of retail holders continuing to jump out for the last 3.5 weeks. It's only a matter of time until we see the impact of that. I'm not going to say it's in the next week, but eventually this kind of pattern leads to some good signs. It might not be all the way to a new all-time high, but it could be enough where we see, 6-figure USD Bitcoin market values once again. A few things on the traditional on-chain side. Transaction volume is continuing to decline. A little concerning. I mean, the utility for BTC needs to stay up there, and it's just kind of been hanging out, and if not declining just slightly ever since early December, really, about a month after Trump was elected. Active addresses doesn't look quite as bad. It's kind of just staying flat at the moment. Circulation is quite low. For those familiar with NVT and the traditional model that we have, it's starting to get into like slightly bearish range again. So keep that in mind. From a utility perspective, we're not quite seeing enough justification to see like a long-term pump, but usually that comes after we see like a psychological resistance get broken. If we go above 100K again, for example, you'll start to see utility react to that. Retail jumps back in, and then depending on how that domino effect works out, if whales and sharks are continuing to push prices up more, then you'll see like a long-term rise in utility like we saw from mid-October all the way till early December. We touched on MVRV. From a funding rate perspective, it's kind of staying flat right now. I don't see too much in either direction. There were a few moments on Binance where things looked a little bit overly bullish, but it's kind of sitting in neutral range right now. So not much is skewing things in either direction from like a overly long bias or overly short bias that could cause liquidations leading to an extra push in either direction. Whale transactions are down as well. So yeah, even though they're collectively accumulating by just a little bit day by day right now, it's not coming with a lot of heavy transactions and interest from whales, just kind of steady accumulation as retails slowly liquidate their coins. Ratio of on-chain transaction volume and profit to loss. Always a mouthful to say, but as of now, this is the break-even line at 1.0. So anything below this is a day where there's more lost transactions than profit. Any day above is when there's more profit transactions than losses. It's been quite a few lost days, actually, more than usual here in February. And that's, to me, a good sign that there's some capitulation going on. It's not quite to the extreme like we saw like during this first and second week of January here, but as long as we're staying low, that's generally a good thing. When we're seeing a lot of big profit spikes, that's when you start to get close to tops. This was like a major anomaly because both retailers and whales and sharks were all just accumulating together after Trump was elected. But this was a good top signal. This was a great top signal. This was a great top signal a couple days before we topped out. And just look for this to stay low. That's a good long-term signal to me. And then like I mentioned, in comparison to Ethereum, the mean dollar invested age line is also looking pretty good for Bitcoin. Dormant coins are continuing to move around pretty frequently. That's what's causing the average age of Bitcoin sitting in wallets to stay in the low 400s, where it's kind of been since the end of 2024. As long as it's not starting to scale up, which would indicate a lot of stagnancy, it's a sign that there's a healthy amount of coins sitting in large wallets that are moving back into circulation and allowing an eventual uptick in on-chain activity, even though it isn't really showing too much in the numbers yet. This is one of the primary indicators of bull markets, is moving down. And if it's at least not moving up, that means we could be primed for another one on any given day or week, really. So again, this is kind of a long-term signal, but I still, a lot of people are starting to wave the white flag and say, okay, we're back to a bear cycle. This is contradicting that and saying we're not really there yet. There's still an indication that we could be, from a very long-term perspective, in a bull market that's just kind of taking a breather right now. Not much network realized profit loss updates here, or notable events, I should say. Supply and exchanges, we already touched on it. Yeah, we had this huge outflow day on February 5th. Our team never really investigated the cause of this, but it was the biggest we saw since November 19th. That was 2 weeks after Trump was elected. It was the third biggest over the last 6 months. So that was kind of interesting. It was right on the tail end of this dump. And then outflow in general is kind of a good thing and tends to lead to pumps like we saw here and even here really. Um, but it was kind of just a weird anomaly. It might have just been like major exchange coins being cycled off the exchanges and then or on exchanges and then even more so off. But that's kind of a good sign. And like I said, we just don't want to see the supply and exchanges moving back up too much, because that could start to indicate that we are approaching the risk of another sell-off coming up. Touched on volume and dominance already. Weighted sentiment is staying pretty neutral. Dev activity, for what it's worth, the Satoshi team is starting to pick up a little bit for Bitcoin. RSI is below 50, so this is the break-even point here, right about there. So when RSI gets below, that's generally a slightly bullish indicator. If it gets really low, like in the 30s, that's a very bullish indicator for Bitcoin. Right now, from a TA perspective, we're just slightly below, which is a good thing. And that's about it for Bitcoin. As promised, I do want to take a look at some altcoins before we conclude this call here. So overall, let me just zoom out here to give you an overall perspective. Whoa, that's a little too much. So if you check out the colors of the labels right now, you'll notice they've kind of transitioned to mostly blue and green. These indicate that networks have cooled off substantially. There's always going to be a few exceptions. So like Lido DAO, for example, which has pumped actually 10% in the past 24 hours and 18% in the past week. It's really picked up a lot in terms of network activity, almost certainly due to the price pump. So people are reacting with like a big upswing in active addresses and network growth and whale transactions, probably a profit-taking signal, so not ideal. Some other coins that are exceptions and seeing a pretty good amount of network activity right now compared to usual is Gitcoin, which is only up 1% in the past 24 hours. So it's not really a reaction to a pump. So that's a better sign. The rule of thumb is if you see a huge spike in network activity after prices have spiked, it's usually a sign that it's a top signal forming and people are only making the network active because they're reacting to the prices, and retailers are trying to jump in and then they end up getting burned most of the time. Not always, but most of the time. But Gitcoin looks a little better because it's not on a huge pump right now. Nexo is kind of a sneaky play right now because it hasn't pumped much and is seeing a huge amount of active addresses. Rocket Pool, same thing. It's actually down 1%, but it is up 45% in the past week. That's interesting. Not too many. STPT is a bit of a sneaky play too. It's down 3%, but seeing a lot of network activity. If we just switch to the leaderboard here, yeah, we see that Lido DAO is the most active network on this model compared to its usual activity. PlayDApp USD coin, interestingly, is seeing a bit of a spike in network activity. So there might be some coins moving aggressively to exchanges or away from exchanges. We want to see stable coins moving to exchanges most of the time. Bitcoin, Nexo, STPT, Pax Gold, UMA, StormX, and Optimism. That's the only one I see in the top 100 outside of USD coin and Lido DAO. Curious what's going on with Optimism. Let's look really quick on Sandbase. So transaction volume has declined quite a bit. We did see these big circulation spikes about a week ago. Do we have regular MVRV for Optimism? I'm curious. We do. Okay, so Optimism's really gotten hammered since December 6th, just a little over 2 months ago. It's down 56% in market cap, but it has started a rebound over the past 8 days, back up 15%. But 30-day MVRV is still down a whopping negative 24.1%. indicating that if you were to add on to your position, you'd be doing so with much less risk than usual. If we add on the 365, yeah, also down huge, negative 40.7% over the past year. So there's a play here, especially with the activity picking up just a little bit. I think network growth is going to look a little better. Show me network growth here. That's a minor spike. It's really not that much, but there's at least a few little upticks going on with optimism that are indicating there might be a little bit of a sign of a bottom forming, and we're going to continue to climb, assuming Bitcoin starts to stable out and potentially climb itself. Whale transactions pretty non-existent. That's disappointing. But is this line? Oh, it's the small retails. Its price is sitting at a little over $1. So if we just looked at like 100K, which is looking good. Okay, this is interesting. So if we just look at 100K plus wallets, yeah, the very large ones are still declining. But I do like the fact that the 100K to 1 million and 1 million to 10 million, I just isolate these two. So these are definitely like two of the key stakeholder tiers that are actually very active and aren't exchange wallets. They're both moving up pretty considerably since Trump's inauguration. So for some reason, whales have become optimistic, pun intended, about optimism over the past 3.5 weeks or so. And there might be a sneaky short-term trade opportunity here. Like I said, if Bitcoin starts to find its legs itself. But yeah, these are kind of the top 10 that are very active right now compared to usual. And then there's a lot that are quite cold, even Bitcoin especially. So if we go to the detailed tab and we zoom in a little so we can show just, too much zooming in. If we show just Bitcoin right here, all of these squares are, or the vast majority are in the greenish blue to blue territory, indicating it's very cold compared to usual. That kind of validates what we already checked out on Sandbase. So a lot of people think this means that it's a bearish signal. It's not. If a network gets cold, it just means it's very unlikely to suddenly see a big direction change in its price momentum. And considering Bitcoin doesn't have momentum in either direction, it's kind of going sideways over the past couple of weeks. This doesn't really mean much other than the fact that retails are jumping out. Whales are not even very active right now, and they're all just kind of sitting on their hands at the moment. It's really kind of just, is there a signal of something brewing for an asset? If so, it's going to show up in orange or red, the label, and it'll show up here on the leaderboard as like a, especially if you see like 10 or less, indicating the rankings of all of the metrics are like in the top 10 compared to the past 90 days. That would be a sign that we're about to see something interesting going on, most likely a price direction change. If we're not seeing orange or red labels here, it just means that the network is chilling out and it's most likely to continue going the same direction. So if it's going sideways, blue would indicate that we're going to continue to move sideways. If we're going down, blue would indicate that we're probably going to continue to go down a little bit. And if we're going up, same thing. That means we might continue to go up because we're seeing no direction in shift indicators popping up on the network. So long story short, I really recommend checking out this activity matrix model because it's helped our community find a lot of great signals. And I take a lot of pride in being able to find daily anomalies that we can report on our insights pages just based on the quick references that we can rely on here. So all that said, guys, it looks like the markets are based on the metrics, continuing this flat sideways range, and we might see it a little bit longer, but from a long-term perspective, I see more good signs than bad. If you talk to different Santiment staff members or community members, you'll probably hear very differing opinions, and that's plenty cool with me. You know, I like when markets are in this kind of zigzag state because it really brings out a lot of different thoughts and analysis and focuses on different metrics and charts, whether it's TA or fundamental, you know, fine by me. And this is we'll kind of see how polarizing we can get. Right now, it's kind of like a lot of people are just being quiet and waiting for the next big move and to get out of this tight range. But to me, this is where a lot of pros make their money, while, you know, a lot of people are kind of afraid to make the wrong move. But as we saw on the screener here, go back to the price swings, you know, there's a lot of variance between assets right now. You can jump on a certain asset and do really well over the short term, or you can end up getting flushed. So make sure you're watching specific assets and checking out some of the metrics for them that I showed here today for some of the top caps. And you very well may find some good opportunities over the next week. And we will update you again next week and see where we're at. I would imagine the most likely scenario is we're still in this tight Bitcoin range of, you know, 93 to 100K. But we've been wrong many times, and we'll find out. So in the meantime, be safe, guys. Thank you to Max for running the stream as always. We should have Maxim back for the next live stream. For those who watched live, we're probably going to go to a temporary earlier time, about 1 hour earlier than when